Hi all, I would just like to welcome you to FinTech Australia's webinar with Alan Tsen, the Chairman of FinTech Australia, and the Honourable Senator Jane Hume. Just reminding you all that you're all welcome to ask questions throughout this session, so either raise your hand via the button down the bottom, or type your question into the chat bar and Alan will facilitate the discussion. Thank you all for attending and I look forward to this discussion. Alan, thank you.
Hi everyone, welcome. Today we're obviously joined by the Honourable Senator Jane Hume. I'm sure we all know Jane in the industry. She's the Assistant Minister for Superannuation, Financial Services and FinTech. As we all know, Jane's bringing 20 years of experience from financial services into the role. I can say it's actually really nice to speak to someone at a high level in politics that actually understands the industry really well. Not throwing shade at anyone in particular, but it's really great to have Jane in the position, and it's been really good working with her so far. And Jane, how are you today?
I'm terrific. Thanks very much for having me along, Alan and Rebecca.
No worries, no worries. Well, again, thank you for making the time. And we've got now 40 participants, I think, in the session. So I think we'll have some questions a little bit later on. And as Rebecca said, feel free to throw in questions along the way. More than happy to pose those to Senator Jane Hume. Jane, before we get going, how are you and your family coping in isolation? I think it's been a change for everyone. How are you and your family coping during this time?
It's been a pretty strange old time, to tell you the truth, Alan. You know, I have 3 kids, all teenagers, and my oldest is at university, so he is actually in lockdown living at university, which I think if I was going to be in lockdown, that's where I'd choose to be. So I think he's living the dream. As for the rest of us, a bit of homeschooling I could do without. And my mother, sadly, my dad passed away about 5 or 6 weeks ago, which was very, very sad. And it was actually on the day that they announced that you were only allowed 1 person at was it 10 people at a funeral? And it actually it's only 8. You know, you have to have 2 funeral attendants. So we had the world's smallest funeral for a man that was just wonderful. But of course, my mum's kind of on her own now, which is really, really sad, very isolated. So my kids are doing their homeschooling there, which I think is a bit of a bonus for me. Yeah. But yeah, it's such a strange time, isn't it? You know, you drive around the roads in Melbourne, it's like driving around in about 1986.
Right.
And, which is, I suppose, you know, the one good thing.
No, it really does hit you when you drive around, when you go out to get your shopping or you know, do some exercise out and about. It really is quite desolate out there. It's a sort of a strange time. So what are you doing to keep yourself busy, Jane? Is it baking, puzzles? Like what are you doing in your spare time?
I would love to say that I have all this spare time, Alan. You know, I'm so jealous of people that say, oh, well, you know, I'm learning a language, or I'm learning to cook, or doing this. All I seem to be doing is work at the moment, because my portfolio is extra busy, not just obviously the fintech side of things, but particularly superannuation. You know, one of our big responses to COVID-19 was the early release of superannuation, and you know, if you think about it, just the size, that sort of $320 billion package of responses. Now that's the equivalent of putting together maybe 3 or 4 budgets within the space of about a month or so. So we've really been busy, but this early release of superannuation is now beginning to flow, and that's taken up an awful lot of our time. And in fact, I think now about 1 million people have applied to access their superannuation early, about up to $10,000 of their superannuation early. Yeah. And that equates to around 8.5 billion or so that's come out of the superannuation system in response to that, which sounds like an enormous amount, but in fact it's we're expecting about 3 times that to come out, and even that's only about 1% of the system. So, but it's still an enormous volume of money, and it goes to people when they need it the most, which is a good thing. But it has been a big logistical exercise. You know, everything we're doing, we're trying to do on the existing tax and transfer rails, which is really important, because that's the most efficient and effective and timely way of delivering services to people. But sometimes it's very hard to stick that sort of square peg in the round hole when you want it to happen quickly.
Yeah, I can imagine. You know, I can imagine it's an interesting experience, sort of trying to push such a big policy piece through on the current rails. How has that been? Have the systems been keeping up, and sort of what are you seeing on that front?
Yeah, well, I mean, look, the best example I think has been the MyGov website. When you think about the MyGov website, you know, it was originally established to have about, at a maximum, about 6,000 concurrent people logged in on the system, and we've taken that up over time in a really short space of time to around 300,000, which is quite extraordinary. And you know, with, say, something like the early release of Super, we had around 1 million people, just under 1 million people, pre-register their interest in that, and then go on again to the MyGov website to go to the ATO to complete the application. And that was at the same time as around another 900,000 businesses were registering for JobKeeper. And it's all done through the same portal, of course. And you know, just keeping that you know, that technology platform viable for just that extraordinary volume of people has been you know, a big task. And you know, full credit to my colleague Stuart Robert in doing that. I mean, it's been such a difficult time, I think, for all Australians and Australian businesses. And you know, and particularly I think in the fintech space, you know, it's been a time of great uncertainty, but you know, we're hoping it'll become a time of great opportunity after the uncertainty.
Yeah, and I think you know, many industries obviously have been impacted. Financial services is an interesting one because obviously there's been a lot of policy work that's been done leading up to 2020, and obviously things are in flux at the moment. On that front, in terms of policy changes, Jane, let's just jump straight into some of the policy amendments and some of the work that's been done by the government. So in terms of CDR, let's start there. Are we anticipating, or you and your team anticipating any changes to the timeline around CDR? Or
no, sorry, I didn't mean to get so close. I've just got something that's bothering me there. Yeah, no, there is in fact no anticipation of changes to the time frame of CDR, and we think that that's really important. If I'm just to sort of take a step back, you know, I mean, the CDR has already had a couple of delays. I think that everybody agrees the most important thing with the CDR is to get it right. You know, we need to make sure that there is confidence from both a user's perspective, you know, a participant's perspective, but more importantly from a consumer perspective. And if it fails, it will take a long time for that confidence to recover. But that said, it's important that we press on, because the intention of the CDR is right, as you would well know. It really was the financial. It was the. It's the Prime Minister's baby. This one, you know, he went and saw open banking in operation in the UK and was enamoured with the idea of not just introducing open banking here, but an economy-wide CDR, which was, you know, a much broader, expansive ambition. And but a really important one, I think, for the Australian economy, because you know, there's never been a more important time to sort of empower customers and boost competition, starting with the financial system, but then, you know, moving to other parts of the economy as well. And I think that in this time of financial stress in Australia, we'll see some extraordinary measures that Australians will take to make changes to their you know, personal circumstances, whether it might be refinancing their mortgage, it might be you know, changing their risk appetite and switching from a more aggressive investment to a more conservative investment, or finding that new credit option or a new savings product. And the CDR will be fundamental to that process, you know, of providing Australians with you know, the data that they need to make the right decisions when they do so. And most importantly, maintain that confidence, as I said earlier, authorising that secure access to the data by accredited third parties. So it'll help people shop around to find a better deal, and it will also use far more sophisticated comparison apps, and ultimately reduce the time and the cost of switching providers. And again, and this is something that we seem to be talking about a lot, and I've been talking about just this morning in the context of superannuation, but the focus on personal data security is so important. And the CDR framework includes such strengthened protections. So consumers should be confident that if they choose to share their data, that data will be safe and it won't be misused. And it's important too, I suppose, on CDR, Alan, to say that even though it is yet to launch, we are already sort of looking beyond the launch date now to the future and examining how we can expand the CDR to make it more effective, include right access, which is gosh, you guys must use the word game changer an awful lot, but right access really is a game changing opportunity. It's a major step forward, and that will be catalyst to so much innovation in so many areas, starting with payments and moving right through to reg tech opportunities. But it will also consider a range of other issues, including things like cybersecurity, consent standards, and the ethical use of AI. So that's the next step of CDR that we're looking at now, CDR 2.0, if you like. And Scott Farrell, who I know many of you are familiar with, is currently undertaking that inquiry into the future of CDR, CDR 2.0. And anybody out there that's interested in this, I encourage you to participate and contribute to that inquiry. We've extended the deadlines on that to the 21st of May, so that should give everyone a chance to have their say. So look, it's strange, isn't it? While the world is in lockdown and everything seems to be on hold and hibernation, CDR is still ticking along behind the scenes, which I think should be encouraging for everybody.
I think it's important. As you pointed out, there have been delays, which are inevitable, and we saw that obviously in the UK and across Europe. It is a complex regime that requires a delicate and thoughtful hand in terms of its delivery. So anticipated, but good to hear that 1 July is still the plan.
And Alan, I think that's really important too to say that the CDR, the open banking in the UK, a lot of the conversation that we were having, just less than a year ago, was about how that was such a slow burn in the UK that it really people hadn't really taken grasped the nettle and taken up the opportunity to use open banking, but they are now, and that's a really positive sign. I think that we're beginning to see that slow burn turn into a flame, and I think that we're going to expect the same thing in Australia too. It will take customers a really long time to make that mental shift, I think, to using the CDR. But once they do, and I know I've used the analogy a few times before, I think it's like the difference between using your Nokia flip phone and your smartphone. We'll look back on the time that we used to do our banking the way we do it now and sort of laugh at how old-fashioned it is and how clunky. So I think it's going to be really exciting.
Yeah, and I think obviously open banking or CDR 2.0 is going to be fascinating with the right access, but also account switching and the like. I think the data coming out of the UK more recently has sort of pointed to a huge uptick in account switching, not only over the last few months, but sort of over the last several quarters. So it'll be interesting to see where we land with CDR 2.0, but good to hear, as I said, that no further delays expected. Another one of the pieces of policy I know we've discussed numerous times and you've sort of spoken to, which is the FinTech bridges. So obviously in the current context, the FinTech bridge is slightly I suppose a different, or may end up being a different concept. I think from a regulatory perspective, sort of that surety across different markets is important, as we see a lot of Australian fintechs trying to branch out into other countries. How are you thinking about the FinTech bridge across other jurisdictions in the current climate, Jane?
Yeah. Well, you're absolutely right. I mean, for Australia, Alan, for FinTech here, global collaboration is absolutely at the centre of our growth strategy, and it's also central to policy making too in the digital economy more broadly. To build access and inclusion, if you want to promote growth and promote competition, if you want to improve decision making, you really have to have that global collaboration.
Yep.
And
No doubt.
and international cooperation is a really vital part of that, to facilitate the free flow of products and services, but also to make sure that we have effective regulations in place, but and also regulatory alignment where possible to ensure that fintech products can be globally available. So, as you said, we launched the FinTech Bridge, the UK-Australia FinTech Bridge, which helps Australian fintechs to enter that UK market and facilitates the UK businesses to bring their capital and their skills and their product offerings here. But we are looking to develop that bridge, the UK bridge specifically further, but also establish key initiatives with other partners. And I think you've heard me speak about it before. I personally think that the greatest opportunity for that is right on our doorstep. When I was at the Singapore the Singapore FinTech Festival last year, was it only November? It feels like forever ago.
It wasn't that long ago.
I was impressed at just the extent to which, just how highly Australian fintechs are regarded over there. It was really encouraging, and how attractive Australia is seen as a destination for their product offerings as well. We've got an amazing demographic advantage, which is very attractive for Australian fintechs that want to enter Western markets. We're financially literate, we're very highly banked, we have a really inclusive financial system, and quite sort of similar demographics to a number of Western markets like Western Europe and North America. So there is really no shortage of demand, I think, for Australian expertise in the Asian market. And the Singaporean sector in particular is a valuable source of capital and also of skills too for Australian firms. So we're hoping that Singapore will be the next great leap, and that will provide potentially not just a bilateral bridge with Singapore, but maybe in the long term, maybe it's a trilateral bridge. Maybe we can do something with both the UK and Singapore, because of course, one of the other things that came out of my conversations over there in Singapore is that how far ahead we are of the curve, in particular with things like data standards, thanks to the CDR. And I think that if we could involve Singapore as a leading fintech hub, the UK as a leading fintech hub, and Australia as the leading fintech hub, we could be really world leading in setting those data standards, global data standards. I think that's really exciting.
No, and I think you're spot on, Jane. Like one of the more undiscussed elements of the CDR is that to the extent we get this right, and all indications are pointing to the fact that we are going to get this right in Australia, this could be the framework that's used in other jurisdictions and could be a global standard. I think taking advantage of that now with connections into Singapore through a more formalized bridge could be a good way forward on that, given that Singapore's still in the midst of figuring out how they implement a complete data economy structure. So let's jump maybe now into, just in the interest of time, some of the more recent policy changes and some of the assistance that the federal government has put towards industry. Specifically, I think one of the questions we've received as an organisation from our members has been around obviously the JobKeeper allowances and sort of the challenge that policy potentially poses to some of our members. Obviously, there's sort of more on the technical side, the input tax credit stuff, in terms of potentially impacting availability of access to JobKeeper, but also more broadly, I think in startup land, pre-revenue companies. We've seen obviously the tax office release some further guidance around it. One of the questions we've got is do you think that there will be, or is there a plan to potentially more formally recognise companies that are pre-revenue within the JobKeeper allowances?
Yeah, okay, so let me take a step back there and say that, obviously, as I said earlier, when we were putting out these responses to COVID-19, they had to be as broadly appealing as possible, broadly effective as possible. And it was, you would never want to use the word rushed, but it was, as I said, it was like putting out, the equivalent of 2 or 3 budgets within a month. It was an enormous task. And obviously when you do something like that and you try and reach as many businesses affected as possible, there are some that inevitably fall through the cracks. So I've worked very hard with my ministerial colleagues and also with the tax commissioner to ensure that as many fintech startups and contractors as possible would be eligible for that $130 billion JobKeeper package. The program itself is targeted so that companies whose revenue flows have been impacted by the epidemic would be able to receive the support that they need in order to keep as many employees as possible in jobs, keep you connected to your employees and your employers connected to their employer. So as you know, it's $1,500 a fortnight, which for most people is equivalent to about 70% or so of the median wage. Now, 2 weeks ago, we launched a more comprehensive set of eligibility tests that encompass both new businesses and also very high growth businesses, which means the majority of fintechs now should be able to access that assistance. And the most important thing too is that we've extended the deadline for applying for that initial JobKeeper payment to the 31st of May. So I'm just pulling up a piece of paper in front of me here to make sure that I get this right. So the businesses, so for new businesses now, if you commenced within the prior 12 months, you qualify for JobKeeper if your turnover has declined by 30% compared to either the average turnover of the life of your business or the average turnover for the prior 3 months. And also for high growth businesses, if your business has experienced a turnover of greater than 50% or more in the prior 12 months, 25% or more in the prior 6 months, or 12.5% or more in the prior 3 months, or then you qualify for JobKeeper if your GST turnover has declined by 30% compared to the average turnover for the last 3 months. I know that sounds like a big mouthful, but it's actually, I think it's quite clear now on the website. There is also an opportunity for businesses with a regular turnover. If your business has experienced a turnover of experienced turnover in 1 quarter of the prior 12 months that's less than half of the turnover in another quarter, then you qualify for JobKeeper if your turnover has declined by 30% compared to the average turnover for the last 12 months. That is very confusing, I know, but I think it does encompass far more businesses. Unfortunately, though, the reality is that not everyone will qualify to receive JobKeeper, and that includes a number of organisations that are in that pre-revenue phase. And while pre-revenue startups actually sometimes have an advantage, their fixed costs are a bit more flexible, so they may well be better placed to weather the storm. But we do understand that the pressure that you're facing, and that we have made some support measures available. So things like PAYG cash flow boost of up to $20,000 per month. There's a government guaranteed credit facility for low interest loans of up to $250,000 for those that want to go down that path. There's a 4-month deferral of PAYG and FBT. There's, for those companies that are investing, there is instant asset write-off and accelerated depreciation schedules for asset purchases. And there's also, and I think this is important, assistance from ASIC, and that includes waivers and deferrals of regulatory fees. And the states have also come good with some payroll tax waivers as well. So there's a lot going on. Can I tell you that I think that the Money Smart website is a really good place to find information on this, as is the Treasury website. And I really want to acknowledge on the way through the goodwill and the leadership that's shown by many of the innovation hubs in playing their part in offering their services rent-free wherever they can. So, it's been a very collaborative approach, and I've been really grateful to, and I know that Rebecca knows that I've spoken to her a couple of times on particular issues to do with this. The input that groups like FinTech Australia have contributed have been absolutely invaluable in all of this.
Yeah, no. Thank you for that, Jane. I think the pre-revenue part is probably the set of questions we get the most around, and to the extent that there is some opportunity to bring that up again, that would be great, because I know a lot of our companies are struggling, with layoffs and having to furlough people. So I think, as our members have sort of expressed, that sort of extension towards it, the companies that are pre-revenue would be an interesting area for us to look at some point. The other area that I think we get quite a few questions around is sort of on the capital side. Given the current market conditions, the capital raising environment isn't probably what it was a few months ago. Are you anticipating looking at potential injections of capital, either direct or indirect, into the fintech ecosystem? Anything sort of planned or being thought through around the capital raise side of things?
Well, despite the gloom and doom, I actually suggest that it's been pretty encouraging to see some of the success stories in the fintech space. Airwallets, I think, is a good example. They recently closed a pretty extraordinary Series D funding round, and they raised something like 160 million US, which is pretty impressive. Zinger obviously have secured over $400 million in investment, and that will set them up pretty well, I think. I suppose we want to increase that message that Australian fintech is definitely open for business. We have a number of early stage venture capital changes that have been made in recent times that should give better access to funding, crowdsource funding as well. And the Business Growth Fund, I think, is an interesting opportunity too. I mean, that's a reasonably new initiative that's come out of the government. It's an equity funding model that is in conjunction with some of the larger banks, but they don't take an equity. They take an equity stake. They're not active investors. So that's an interesting opportunity too. And I know that recently I spoke to an organisation that we think that might be a perfect funding model for. So we're looking at ways to boost capital flows, certainly, but I think that there's an awful lot of work that can be done, and I don't know whether we want to make rapid changes to this space right now. There's we should probably let some of the changes that have already been made just settle and let people sort of find their way.
So just taking one step back into the JobKeeper, one question that's sort of come up again is around, and I sort of mentioned it really briefly, which was the input tax credit element. Obviously, it impacts quite a lot of lenders. Is there any plan to make amendments to that or to clarify that position around the input tax credit treatment?
Look, I'd like to say, that's something that we're considering. It is something that we have considered as part of the JobKeeper package. And at this stage, no, there aren't any changes that are being made to that. But, this is an iterative approach. We don't quite know what the economy is going to look like as we come out of hibernation. I mean, I think that as we move into the recovery phase, we'll be focusing on what we want the economy to look like on the other side of this, and we understand the importance of the fintech ecosystem at all stages, whether it be pre-revenue to post-revenue to people that are already exporting. So as your advocate, your industry advocate in the ministry, I'll continue to ensure that you receive everything that you need, everything that can possibly be provided to keep your teams in place and to keep your organisations growing. Yeah,
great. No, thanks for clarifying that, Jane. The other area that I think, just looking forward and out past hopefully this phase of lockdown, etc. What are some policy areas that the government's looking at post this? Has anything changed in light of COVID-19? yeah, just looking out into the future, a little bit over the horizon and sort of the current state, what are some of the policies that you and your team are thinking through?
Well, I think you'll hear a lot more about that tomorrow, believe it or not. The Treasurer is doing a speech at the National Press Club, and he will be, I suppose, setting the scene for what we want the economy to look like on the other side of all of this. Certainly, I think that what is clear is that, the economy was in such a good position. It didn't necessarily feel like at the time. You don't realise, don't know what you've got till it's gone, Jodie Mitchell said, but it's exactly true. We had an economy that was, even though the growth was, around 2.5% or so on a relative scale, that was pretty good. We had very, very low unemployment, only around 5.2%. I think it was 5.1% before the pandemic hit. We had really high levels of participation in the workforce, particularly high participation levels from women, and we had one of our lowest levels of welfare dependency that we'd seen in 30 years or so. So we were actually in a really good place, and a budget, of course, that was heading back to balance, which we were really excited about. And of course, this has changed everything. It has moved the dial entirely, and we now, having spent, gone from a balanced budget to $320 billion. It's just an eye-rolling amount of expenditure. So what we know is that at the end of all of this, we're going to want to see a high growth economy to pull us out of it. You've got two choices. How do you get rid of your $320 billion? You can either tax your way out of it, or you can grow your way out of it. And we know that we want to grow our way out of it because that's the best path to prosperity for as many Australians as possible for generations to come. And the fact that I think that the Prime Minister has singled out the fintech industry speaks volumes of the value and potential that we see in this industry generally, and of course more broadly as part of that recovery. One of the things that I think that has come out of COVID is a new engagement with technologies and understanding that we don't necessarily need that face-to-face interaction for every transaction. And I think that that's a fabulous opportunity for this industry, that we're finding a whole new generation of people that are now while it used to be something that we could engage the young and it was for the future, we're now actually engaging generations that we've never really had much interaction with before. And I think that that's a great opportunity for the fintech industry. So there is more to come, and it really is. It's easy to say we're only ever limited by our imagination. We're going to be relying on you and the people on this webinar for their imaginations to try and create that high growth economy in the future. That's a really exciting space to be.
Yeah, and I totally agree. I think one thing we've definitely seen during COVID-19 is people rapidly move to having to implement more complete technology solutions to not only face-to-face, but also more broadly how to interact with customers. So it's definitely going to change the way people interact, not only with their financial services, but more broadly with other consumer services. Jane, what are you excited about in the industry at the moment? I mean, you've probably seen quite a lot. I know you're ticking over almost 12 months, is it, in the role?
Yeah, it'll be 12 months in July.
Yeah, that's right. Yeah, because I remember the first event that I think you sort of ventured out in the new role was to the Finnies. So right. Almost 12 months. What are you excited about in the industry at the moment, Jane? Or what's sort of catching your eye?
Can I tell you, one of the things that I'm most excited about is the intersection across different parts of my portfolio. So not just fintech, but how fintech intersects with financial services more broadly, financial advice, superannuation. That is lovely when I see two parts of my portfolio combined to create something terrific. And of course, one of the other things that I should have mentioned this earlier that I think that will come out of COVID and out of the expectation, the need for that high growth economy is, if not a relaxation, certainly a rethink of our regulatory environment to allow us to sort of free up whether it be capital or whether it be skills or whether it be, cross-pollination between different sectors. That's actually going to be really exciting, I think. So as regulations disentangle, we can see innovation flourish, and that's what I'd like to see. As I said, that cross-pollination between fintech and other parts of my portfolio, and particularly superannuation. Super for me is that's sort of a personal hobby horse, in a place that I've worked an awful lot prior to entering Parliament too. And it is, even though compulsory super is really it's not even 30 years old yet, it does seem to have, it has its origins and its operations sort of embedded in old thinking. And but there's a real opportunity now that people have actually started engaging in their super far more, because they've got this opportunity for early release. We're going to see, I think, a much greater demand for a more flexible industry generally, and a more responsive industry. People are going to say, well, hell's bells, what is that nearly $1.10 that I put away out of my salary every month? And where's it going? And what's it being invested in? And what if I don't like what it's being invested in? And can I switch it around? And, should I switch it around? Where do I get the advice to make that decision? Do I need advice to make that decision? Do I need, holistic advice, or just do I need some scaled and specific advice? And how much should I pay for that? And so, all of these things, these questions are now beginning to be answered, just because it's demand driven, rather than which superannuation has always been, which is a sort of top-down, telling you what you need, paternalistic approach. I think that's a great opportunity, a really good opportunity, and will create a far greater, not just engagement, but far better financial outcomes for people in the future.
Yeah, and superannuation, incredibly arcane for such a young industry. On the policy front, beyond what we've seen more recently, obviously, as part of the COVID-19 policy packages, what other policy areas do you think would help facilitate that? For example, are there any changes in disclosures, or how are you thinking about, sort of from a policy perspective, helping to push that forward? Many of our members obviously sort of work in that space and have startups that are facing out into superannuation. On the policy front, anything else that you're thinking through that might be of benefit to the fintech ecosystem?
Well, there's a couple of things. I mean, I think first and foremost, we've seen that some super funds just simply aren't up to scale at the moment to be able to effectively invest in the best interest of their members. And so we're going to see a lot of mergers happen in the market. We like competition, love competition, all good with competition, but there's probably too many super funds out there that are subscale. So with those mergers comes great opportunities, particularly for automation of back office services and front end relationship management with customers. So, I would imagine that the fintech sector would take advantage of both of those. So I think that's probably one area. The other is, of course, and we have some legislation that's before Parliament right now on choice of superannuation, trying to ensure that people aren't forced into a fund just because their employer says that they have to. If you push trolleys at Coles, why should you have to go into rest? If you, serve lunch at the football at the MCG, why should you have to go into Host Plus? You shouldn't be forced to get a super fund, particularly if you've already got one, just because your employer imposes it. We don't think that's an efficient use of a compulsory system. So we're bringing in super choice legislation. The other, of course, is, and this is the holy grail, I think, is changing the default mechanism for superannuation. Making sure that if you don't choose a super fund when you go into your first job, what is it that you end up going into? How is that chosen on your behalf? Because, in the same way that, whatever proportion is of Australians, and I know I've used the stat before and I can't remember what it is now, whatever proportion of Australians still have the transaction account that their parents set up for them at their bank, it's an enormous amount of people that still have the same super fund that they first went into in their first job. And, you know, it doesn't matter whether you're the CEO or something now, you might, you know, push a trolley at Coles in your first job and you're still with Rest for that very reason. So that's kind of crazy. We want to make sure that we have a better default system as well, a fairer default system. And so I think there's real opportunities for the fintech industry around all of these mechanisms. You know, there really is only two major administrators in this country. There's Link and there's Mercer. There are better ways of doing back office. Superannuation funds are set up as trustees, so they have sort of limited capacity to to access lots of capital to do that sort of administrative work. There are smarter ways of doing it rather than bigger ways of doing it. I think that's where fintech can come in.
Yeah. Earlier, Jane, you spoke of Singapore and sort of, you know, when you were over at the Singapore Festival, sort of seeing how well regarded Australia is. And I know that, you know, there's obviously the Senate inquiry on at the moment, but also, which has been extended, but also a roadmap that's sort of been thought through in terms of what the fintech ecosystem looks like. When we think about other ecosystems like your Singapore's, the US, or let's say the UK, what do you think are the sort of the main things that Australia can do to sort of bolster its position in global rankings? And, you know, again, sort of that might be some policy stuff, but more broadly, some call outs in terms of what we could be doing as an ecosystem.
So, I mean, that's an interesting one and something that we turn our mind to on a daily basis around here. You're right. I should have done a little shout out to my colleague Andrew Bragg before, you know, who is running the FinTech inquiry. What a great source, wealth of information he is generating there for this portfolio. You know, to be able to you know, work out what it is that to really sort of get a broad, almost database, if you like, of information from players in the industry, from different players in the industry and different sectors of the industry, as to, you know, what it is that we need to build from a government perspective to allow the industry to flourish. And I think that that's what we're looking at now, whether it be, you know, if we're looking at infrastructure building from a government perspective so that fintechs can leverage from that infrastructure. And it might be, you know, something like the CDR, which is, and that's what that is. That's government built infrastructure that allows fintechs to leverage. It might be, you know, the new payments platform. How do we make sure that you can leverage from that infrastructure as well? And then it's all, from our perspective, it's about bringing capital in, making sure you've got the skills that you can access, and then you've got those export opportunities on top of that to make your product global. So, you know, we're not, for want of a better expression, the ideas people. You guys are the ideas people, but our job is to make sure that you have the infrastructure that you can then you know, leapfrog from and use as the trampoline to get you to the next level.
Great. Yeah. Just looking through the questions, I think we've probably covered the ones that have been asked. If there are any more questions, feel free to drop them in now, and we'll get them out to Jane. So I've got one here. It says, thanks for joining us today. Can you share some perspectives on the SFSF and how the AOFM are progressing what is likely to be an incredibly busy time for them? They've been pretty quiet in terms of announcements for a couple of weeks now. As a fintech who is hoping to leverage the SFSF to fund Australian SMEs who need working capital, it'd be good if you can reference when we will see funding flow into direct warehousing facilities instead of just the secondary markets.
Yes, okay. So the SFSF, which for those that are not familiar is the Structured Financing Support Fund, which is managed by the AOFM. That's $15 billion there that is sent out to provide, you know, capital opportunities, particularly to smaller lenders. Rebecca will know we had a meeting, gosh, at the beginning of last week, I think it was, with both AOFM and Treasury participants, as well as some industry participants to find out where those gaps were, what the experience has been interacting with AOFM up to now, and find out how we can free up those funds to give more and broader access to them. Treasury heard that message, took it on board, and have gone away now with AOFM to come back with some recommendations as to how we could do that. I don't know whether I can give you all that much more information in this forum, but if it's something that one of your constituents would like to speak to me about offline, I'd be quite happy to arrange that.
Yeah, no worries. Thank you, Jane. If there are any more questions, feel free to drop them in. Jane, while we're waiting for some more questions to drop in, what fintech apps are you using? And what products have you tried, or have you sort of dabbled in?
I have to be very careful, believe it or not, with the apps that I can use or the services that I can use, because I have to declare them. So I can't really have much of a fiddle. And I'm very careful about not playing favourites, because I think, you got no idea how much grief I get from super funds, because I have to declare which super fund I'm a member of. Why are you a member of this one? Why are you a member of that one? And even banks I have trouble with. So I don't want to be too specific. I will tell you that I do have an investment app, and I won't say which one, that I have set up as a sort of test run. I can't say, guys, I'm a single mother with 3 kids. It's not as if I got a hell of a lot of money to invest at the moment, but I at least have a crack. I like to do it, and I have as much of a free fiddle. I have so many of your apps on my phone, can I tell you? And as much of a free fiddle I can have, I do, until I have to commit. And then once I commit, I then have to declare. So I'm very cautious. Can I tell you that there are some people in my office that are very, very engaged, and I think you guys are familiar with certainly with Harry. He's he's probably watching right now. Harry is the king of testing the waters on your product offerings. So
that's great.
Yeah, so we do see them, even if I don't personally have them all.
Yeah, that's good to hear. Any questions? Anyone else want to ask anything? Let me just, what I'll do is I'll scroll through some of the questions we got earlier. I think we've sort of discussed most of them. Let's have a quick look here. Let's see, sorry. No, we've done that.
I love it when I've answered everybody's questions, Alan. That's always a good thing. I suppose, let me just give you a little update on one other part of my portfolio, 2 other parts of my portfolio, I think, that we've sort of touched on already. One is the financial services side of things. The most important thing that we were speaking about only a couple of months ago were the Hume Royal Commission recommendations, and making sure that they were all implemented by it's going to be 90% by the middle of this year, and 100% at least initiated by the end of the year. Now, I don't want to put words into the Treasurer's mouth. He will announce what he intends to do with that in his own time. But clearly, Treasury's priorities have taken a turn. And when we were looking at Hume originally, that was taking up an extraordinary proportion of our legislative agenda. And now we've had to make adjustments. So I think in a very bipartisan way, we will see some changes to the timetable of the Hume Royal Commission recommendations, and that's an opportunity in itself, because you guys can go and see where the concerns were from industry and try and fill those gaps with a fintech solution often, and that's really exciting. And that leads me, I suppose, to my the next issue that I'd like to raise, which is financial advice. Financial advice, as you guys would well know, is an industry that's been through an enormous state of flux in the last, not even last few years with Hume, probably more like 10, 15 years. And it has tied itself up into regulatory Gordian knots. And now we're getting to a stage where financial advice just simply isn't broadly available to average everyday Australians. To go and get a financial plan costs around $5,000, which is just totally crazy. But that's what the regulator requires. As I said, I think we'll see a change in the temperature of regulations, and I think that there is also then a real opportunity for fintech to provide that, to meet that need of financial advice to broader Australians. People want advice; they seek advice. You go to the Money Smart website where there's all these calculators. That's it's got so many hits. It's amazing, but really, nobody knows to go there. And I think that a company that finds that right solution that appeals to the mass in the financial advice space will do very well.
Yeah, great. Just on the back of talk of Royal Commission, Jane, Stuart asks, do you think the Big Four banks' response to COVID-19 has mitigated or even muted the Royal Commission findings?
No, I think that, we have been very clear that the banks have a massive responsibility as part of the COVID-19 response. And look, to their credit, I think that they have genuinely stepped up and have done what needed to be done. Sometimes there's been a bit of arm twisting, and I think the Prime Minister used that phrase himself. We twisted the bank's arms to do X, Y, and Z. But on the whole, I think that the banks have realised that they have an existential crisis here too. They rely on a strong Australian economy in order to function and to function successfully. So they needed to make that big leap. Has that mitigated or changed the response to Hayne? No, except that perhaps there was so much reputational damage done during Hayne that they knew that if they were to do anything other than really step up for this Team Australia moment, all that would happen, they would compound that reputational damage. And I think that on the whole that they have done the right thing. They've done the right thing. But we'll still, hold their feet to the flame whenever we need to.
Good to hear. Good to hear. In terms of, obviously, one element that's really tied to that is expanded competition in financial services, and part of Hayne, I imagine, will be, or implementation of Hayne, is to ensure that there is further integrity added to the level of competition in market. Do you see that still being a centerpiece? I imagine yes, but
absolutely. Right down to, and that wasn't Hayne really. That was the Murray inquiry, the FSI, and that, gosh, you think about when was that? 2015, I think that reported. So it's a long time ago now. But CDR was open banking was a recommendation that came out of the FSI, and it's lovely now beginning to see it come to fruition. But I think that if Hayne pointed out anything, it was the complacency and inertia of the Big Four, of a Big Four pillared banking system. And as I said earlier, I reckon that you bring in competition, you bring in innovation into that space, and as long as it's appropriately managed and oversight and regulated without being too onerously regulated, bring in the CDR on top of that, we're creating a system that is the smartphone compared to the Nokia, which is great. And it will be, I think, our banking landscape will be unrecognisable almost within 5 years, and which is amazing considering it's looked so similar for the last 40.
Yeah, a huge amount of inertia, and I think CDR will be a good push in a slightly different direction. Just in the interest of time, one more question, Jane, and then we will say thank you very much for joining us. Any plans to expand ESIC, which obviously it's a topic near and dear to my heart. Any plans on that front? To expand it. I don't want to preempt any announcements or overpromise and underdeliver, but I can tell you, and I think I might have sort of alluded to this earlier, that any opportunity to free up capital for investment is something that we will be considering. And Alan, you put me on the spot. Let me just say, while the plans might not be immediate, it is always something that we're considering. Yeah, It's good to hear. Beck, did you want to jump on and we will say our thank yous? So I'll just start. So thank you everyone for joining us obviously today. I really appreciate all 40 of you coming along today. And obviously more broadly, we appreciate your support of FinTech Australia. As Jane said, we've been working as an organisation very hard, and obviously Beck's been spearheading this, and she's been in contact, I think, with nearly everyone. I'm just flicking through the people who are on this call today, been in contact with every one of you. So again, thank you for your support. Industry is getting stronger and we've got great supporters in government. Again, Jane has been a fantastic person to work with in trying to push forward the agenda around the importance of FinTech in, as I mentioned, pushing competition in financial services. I think everyone understands this all the way up to, as Jade said, Scott Morrison. So again, thank you all for your participation in not only all the submissions we make, but in your participation today. I want to thank you very much for that. I'm just going to hand over to Beck just for some closing words. Thank you. Great to speak to you, Jane, as well.
You too, Alan.
Oh, sorry. I just realised I was on mute. I'm very sorry, everyone.
I'm so glad. I thought it was me.
I spend half my day on Zoom and I still can't work out how to take off the mute button. On behalf of FinTech Australia, I just wanted to thank all our members that have joined us and all the members that submitted questions for your support over the last few weeks. And obviously, I'd like to thank our Honourable Senator Jane Hume for taking part in the discussion today. I would normally ask all our attendees to thank our guests and Alan Tsen for moderating, but it's a little bit different. So on behalf of FinTech Australia, thank you both for today.
Thanks very much, Rebecca, and thank you very much for having me along. And Mike, can I just last final words for everybody? Please, I know it might be tough for people in your industry, but please download that COVID Safe app. It makes such a difference to allowing us to start reopening things. So I encourage as many people as possible to download the app.
Thanks, Jane. I've got the app. I'm hoping everyone else has the app. My parents have the app. Have a good day, everyone. Thank you. Bye.